Great to be here with you today, and good afternoon, everyone. And it's truly an honour and a pleasure to join you at today's Financial Systems Conference 2025. And indeed, this is one of my first key engagements as our country's finance minister. And I'd like to thank you, Governor, for the invitation and the very warm welcome today. I'd also like to acknowledge and extend a warm welcome to all our distinguished guests joining us today, and in particular, Olaf Schleipen. And thank you so much for being here with us as well today. This year has been marked by a significant shift in the global economic landscape. That is probably an understatement. Most notably, we've seen the deeply regrettable introduction of widespread tariffs. As a country that has benefited so substantially from decades of free and open trade, tariffs represent a clear challenge to the Irish economy, potentially impacting future waves of investment and job creation opportunities, all while weighing heavily on global growth. In response, the government has initiated a series of significant engagements with both the European Union and with our US counterparts to ensure that the Irish position was fully understood. And we've worked extremely closely with key stakeholders through the Government Trade Forum, meaning that this engagement has been directly informed by those sectors most likely to be impacted. While the EU-US trade agreement negotiated during the summer provides much needed levels of certainty for Irish exporters, it is important that we always seek to improve that further. Ireland has always been, and Ireland will continue to be, a constructive and very good home for US businesses. I often say they don't locate here for the weather. They locate here because this is a good country in which to do business. This is a good country in which to do business that provides you access to the major European market. But while we want to continue to do business with the US, and indeed we want to grow those business opportunities further, we do also need to look for new opportunities to diversify markets for Irish business. It's important that we take every opportunity to identify new market opportunities. And that's why we recently published a National Market Diversification Action Plan to be a key driver in achieving this aim. Despite the wave of successive shocks that we've witnessed in recent years, the Irish economy is in a relatively strong position at present. Indeed, the number of people in employment in this country is at record levels. Inflation has now returned to more normal levels, acting to support real incomes. The significant investment set out in our National Development Plan will help to ensure that our country remains a competitive place in which to invest. And indeed, this was also a central theme in last month's budget. The Accelerating Infrastructure Task Force will play a critical role in moving forward the delivery of key infrastructure projects by identifying barriers which are impeding progress and advising how they can overcome, thereby unlocking infrastructure delivery right across the country. And let me be blunt, it's taking far too long to deliver far too many projects in this country. We have now provided an unparalleled level of capital investment through our revised National Development Plan. The next challenge now is to make sure we can accelerate delivery. And that is going to require evidence-based decisions, and it's going to require political courage to implement those decisions. We also, of course, need to ensure ongoing careful management of our public finances, including through continued transfers to our two long-term saving funds, putting us in the best possible position to respond to any future challenges and future shocks. Recently, my department published Future 40, a document that tries to identify the main factors that will influence our living standards, not in the next few years, not in a short-term fashion, but in the decades ahead. This type of strategic thinking is fundamental, and it becomes even more so in light of the shifts that are currently underway in this country and in the wider global economy. The key takeaway from the analysis from Future 40 is that we have a window of opportunity, a window of about a decade in which we must prepare for significant demographic changes and significant other changes in both our economy and our society. Government is determined to use this window. We must use this window to strengthen our economic and social foundations in order to support future gains in living standards. Importantly, I'm pleased to say that the European economy has also remained resilient in recent years. Despite growth and investment prospects being impacted by heightened economic, geopolitical, and trade-related uncertainty, we have seen that resilience. These challenges that I've just outlined emphasize the importance of continuing, though, to strengthen in every way we can our economic resilience through programs of reform, through strategic infrastructure investment and measures to boost European competitiveness and productivity. Strengthening international cooperation in critical areas through the promotion of open and predictable multilateral rules-based systems will further maximise economic benefits while working to minimise uncertainty and risks. It is imperative that we continue to ensure the sustainability of our public finances, that we put debt on a downward trajectory, that we reduce deficits, and that we rebuild fiscal buffers. As all of you will know, Ireland's financial services sector is a very significant contributor to the Irish economy. It plays a key role, therefore, in improving the quality of life of our citizens. The sector contributes positively to our economic growth. It provides growing levels of tax revenue through the creation of both direct and indirect employment opportunities. Ireland hosts 22 of the world's top 25 financial services companies, 21 of the top 25 global banks, and 8 of the top 10 global insurers. We are now the 4th largest financial services exporter in the EU and 8th globally, and we've become the 3rd largest location for investment funds behind the US and Luxembourg. While our financial sector is largely export focused, the sector's vital role in supporting the domestic economy should never be forgotten or understated. Thanks to you all, it is a sector that's providing essential and increasing innovative services needed by consumers and needed by businesses to achieve financial and personal goals, including increasingly convenient, efficient and safe means of transacting, which is vital for the functioning of our society and our economy, allowing for the flow of credit throughout our economy, providing consumers and business with access to capital that they need to grow and prosper, providing for our savings and investment needs, generating returns while ensuring that capital flows towards activities that grow our economy, and allowing crucial economic activity to happen by allowing for the management of risk. At an EU level, following the Draghi and Letta reports and a shift towards increased protectionism geopolitically, we are now seeing a laser-like focus on enhancing European competitiveness and innovation. In particular, I believe the Savings and Investment Union project poses huge potential. It seeks to drive competitiveness by deepening the EU's capital markets, supporting growth and enhancing the resilience of our financial system. Given the composition of the financial services sector in Ireland, given its role as a gateway to Europe for global and European firms, we can play an important part in enhancing both Irish and EU competitiveness, supporting growth and investment, particularly in funding SMEs and critical infrastructure projects. It is for this reason that fostering the continued growth and success of our financial services sector remains a priority for the Government of Ireland. Key to this will be the development of our new Ireland for Finance strategy. Some of you may remember, I see some familiar faces, the opportunity I had when I served as a Minister of State in the Department of Finance to launch the original IFS 2020 strategy. Now, as Minister for Finance, I look forward to helping to shape the new strategy for the sector that will bring us to the end of the decade. A public consultation process closed in September. 60 responses have been received from a diverse cross-section of the financial services ecosystem. These submissions are currently being reviewed, and we intend to publish a new strategy in the first half of next year. I want to touch on the issue of simplification. The reduction of the regulatory burden for businesses in the EU is a crucial step towards enhancing the Union's competitiveness, and it's one which Ireland firmly supports. However, it is essential that we all understand what we mean in terms of this objective. It's essential that as we focus on this, that we don't lose sight of the fact that financial regulatory simplification should not be an end in and of itself. Financial regulation is, of course, vital, but it's also absolutely appropriate to periodically review the existing regulatory and supervisory frameworks to see if the same outcomes can be delivered in a simpler and in a more efficient way. It's crucial that we get this right, and it's also crucial that simplification is never misunderstood or never slides into deregulation or lower standards. I'm also conscious in saying this that simplification should be undertaken in a way that limits the disruption on industry so you can continue to thrive. As I speak to you today about all that we wish to address in the time ahead, about all the innovation, about the new opportunities for financial services, it's important that we never lose sight of the people who use and benefit from your services daily. As every industry becomes propelled by fast-moving innovations in technology, we must bear in mind that it will be worth less if the consumer is left behind. It goes without saying that the financial decisions consumers make at different points in their lives can have a profound impact on their financial well-being and indeed on their overall quality of life. It's important to the overall economy that consumers are enabled to be financially literate and to be well informed. Enabling people to better understand financial products and services ensures that they're better placed themselves to make good financial decisions, able to look after their own interests and better able to safeguard their own financial well-being. In February of this year, we published Ireland's first ever National Financial Literacy Strategy. This is a 5-year, stakeholder-led strategy that aims to improve levels of financial literacy in Ireland. By bringing stakeholders together, increasing cooperation and coordination, we're going to support greater financial well-being and resilience for everyone in Ireland. One of the aims of the strategy is to increase awareness of consumer rights and protections, and this includes awareness of the revised Consumer Protection Code. Ireland ranks highly in financial literacy, but there is still more work for us to do, as around 40% of adults in Ireland do not meet the minimum level of financial literacy the OECD sets out. The strategy's action plan is currently being reviewed, and I hope to publish it alongside an 18-month action plan early next year. Alongside the strategy, we've also launched a new set of guidelines for education in school called Financial Education in Schools, Guidelines for the Financial Services Industry. These were developed in partnership with the Department of Education in consultation with many, including our National Curriculum Association, as well as indeed with industry, and I thank you for that. The goal of the guidelines is to encourage coordination and best practice by providing a reference point for leaders in schools, for teachers, for industry, on the expectations for financial education initiatives being delivered in schools. It aims to deliver, for example, with any potential conflicts of interest by ensuring that all materials are objective, are balanced, and are impartial. Our work here very much aligns with that of the European Commission, which in September published an EU financial literacy strategy, a strategy that will empower citizens, raise awareness, and increase the participation in capital markets, creating a more investment-savvy culture across the European Union. As everyone here is more than aware, we're entering into a very busy period where many important savings and investment union legislative proposals will come at us quickly. To maintain momentum, we're working in close coordination with other member states, with the European Parliament and other stakeholders, particularly to advance legislative files where we believe progress can be made. As I mentioned earlier, the aims here are to deepen and further integrate our capital markets to support growth and to enhance resilience in the financial system. In large part, the SIU aims for greater balance between the role of banking and non-banking sectors within the EU to energise the economy and to increase that resilience, and indeed to crucially support the green and digital transitions. This requires many interlocking policies at an EU level, which will need to be complemented by concerted efforts at a national level. It's clear that even before recent geopolitical developments, support for the EU Capital Markets Union project was mounting. Everyone in this room will be well aware of the array of statements and reports issued over the last year, including what I've already referenced in terms of Draghi and Letta, as well as the Welcome Eurogroup statement in March. Many of the issues and recommendations in these reports have been incorporated now into the Savings and Investment Union strategy published by the Commission in March of this year. The SIU initiative, which combines the Capital Markets Union and the Banking Union, will be a key priority for the European Union and for Ireland in the coming years. The strategy itself sets out a useful roadmap encompassing a range of legislative and non-legislative proposals, which will be published over a relatively short timeframe, really between now and the end of next year. Ireland is and will remain a strong supporter of the SIU initiative, and we're actively involved in progressing and driving forward measures under this initiative. At its core, this is a good concept about making our financial system more competitive, more accessible, and better able to serve the citizens and the businesses of Europe. When it comes to our priorities, we support the multi-centre of excellence model for SIU, an approach grounded in the idea that Europe should leverage the strengths of existing marketplaces by enabling all national and regional marketplaces to flourish. This model helps avoid over-concentration and indeed over-dependence on any single financial hub, and instead it champions diversity, balance, and the harnessing of local infrastructure and expertise. The busy time we're entering in terms of all of these legislative proposals will also coincide with this country's presidency of the Council of the European Union next year. And I want you to know that Ireland will have an eye on trying to advance the SIU as best we can from both a top-down and a bottom-up perspective. So I want to thank you for being here this afternoon. I want to thank you, and I want to thank your sector for your ongoing contribution to our economy and our society. I look forward to working with you in the months and years ahead. Your involvement and your participation here shows that you're ambitious, committed and excited about the future of the sector and for the future economic health of our country in the years ahead, and so too are we. Enjoy the rest of the conference. Gurmila Malgam.